changing administration, far more digital friendly, far more crypto friendly. I don't see this stopping. And I think Bitcoin will become a standard allocation in alternative assets, which is sort of 3 to 5% in sovereign wealth and in hedge and in private equity. It just shows you have to go through the pioneer phase, the cowboy phase. There are no more cowboys in crypto. They're all in jail.
Kevin is best known for his role as a shrewd investor on the hit TV show Shark Tank. His notable business achievements include founding the software company SoftKey, which later became the Learning Company and was sold to Mattel. A proud Canadian, Kevin has been an entrepreneur and international investor for over 30 years.
Kevin, thanks for having us. You know, over the last 5 years, I feel like this trend has accelerated, where people with assets are getting richer and those without are getting poorer. This always happens throughout history, but it's really started to accelerate. And Bitcoin is a perfect example of that. You were early to Bitcoin. Do you still like it? What made you like it initially? And what are your thoughts on it today?
Bitcoin and digital payment systems have kind of grown up hand in hand. I mean, there's a lot of tokens, but the granddaddy of them all is Bitcoin. And for years, you know, the pioneers kept getting arrows in their back. Some of the early exchanges that became behemoths, their CEOs spent time in prison, and all this stuff was so controversial. But slowly but surely, it started to be considered an alternative asset class about 5 years ago. And that was when I first, maybe 6 now, and I started to put an allocation in, no different than gold. And it's actually performed very, very well. And so people call it digital gold. It has a lot of price volatility, but the real opportunity, and I think why it's, you know, actually increased in value significantly from the 16,000 when I first bought it, here it is close to 100,000, is that the regulatory environment in the U.S. is slowly changing. Congress is slowly bringing forward, you know, the Stablecoin Act, for example, which has been floating around for 3 years now. It's actually getting traction now to back some form of digital payment system against the U.S. dollar. And Bitcoin also is starting to get 1 to 3% allocations with institutions. So, you know, changing administration, far more digital friendly, far more crypto friendly, I don't see this stopping. And I think Bitcoin will become a standard allocation in alternative assets, which is sort of 3 to 5% in sovereign wealth and in hedge and in private equity. And here we are. It just shows you have to go through the pioneer phase, the cowboy phase. There are no more cowboys in crypto. They're all in jail. You know, that leaves the rest of us that have to be compliant looking at it saying it looks interesting.
When you look back in history, right, global economies, they're always gravitating towards these reserve currencies, you know, the Spanish dollar, the British pound, the US dollar. What evolution, how do you see that evolution moving Bitcoin over the next little bit?
It may not ever become the reserve currency, but it could become no different than gold, which is an asset class that is part of every portfolio's diversification. Having zero gold makes no sense and hasn't made any sense for 2,000 years. It's performed and it's stable and it's a hard asset. Bitcoin will be the same. Now, if you're a crypto, I mean, you think about the standard allocation metrics of, you know, if you're running $1 trillion, $500 billion fund, you usually have no more than 5% in any one stock or 20% in any one sector. So if crypto is a sector, you know, 20% of $1 billion is a lot of demand. And within that allocation is a 5% weighting for Bitcoin. That's why Bitcoin is, you know, broken 100,000 recently, because there are people starting to allocate for it. And the idea that it becomes more and more accepted in every level of portfolio, right down to a retail investor saying, I want to own a few Bitcoin. What I tell everybody today that's still a skeptic, you don't have to own all of your net worth in Bitcoin. But if you own 5%, you're doing pretty good. It's been a pretty good thing to own.
Yeah, definitely. Over the last 15 years, there's really nothing that's outperformed it. So you don't see it integrating into society where it's going to be used in daily purchases and just kind of spreading into all aspects of our lives. You see it as an asset class that people are going to allocate 1, 5, maybe 10% of their net worth to.
Yeah, I see stablecoins, the standard global stablecoin, becoming a transactional platform. But I don't trade my Bitcoin. I buy it and I hold it, and that's what many institutions do. It's just an allocation in a portfolio. And we change the weighting on a quarterly basis. So if it's gone up a lot, I have to trim it back to 5%. If it's gone down a lot, I can buy it up to 5%. That's not the same as using a USDC coin, for example, which you don't have to disclose. I own a part of the company that makes it, and I use it. I have quite a bit of USDC, and I stake it and everything else. But that is interesting because the cost of transaction between countries when you're using traditional FX, like going from US dollars to Swiss francs, is really expensive. And if the counterparty in Switzerland, which they're just starting to accept it, will accept USDC, I can transfer that in a matter of 3 minutes, maybe less, at 100th of the cost. So, and that person, for example, I'm buying a watch. I buy a lot of watches. I'm a watch collector, and I do a lot of work with independent watchmakers for piece uniques, one of a kind. It's so much easier just to use USDC than to go and do all the work to do the, transfer, the Fed wire, all this stuff. I think the rest of the market sees that too. So we really have multiple opportunities.
And are they happy to accept it right now?
Yeah, not everybody, but again, it's something that's starting to move forward. Once you use it, once you've tried it, and once it's stable with you, and once you've found a secure way to hold it and mark to market it, and that's with legitimate, compliant exchanges, it works.
Now, you've just returned from Mar-a-Lago. The new administration coming in, how impactful could this be for Bitcoin?
Well, I have a long history with the Senate because I've been involved in multiple hearings during the controversial days of, Binance and FTX, and I rode all through that and testified multiple times. And I got to know lawmakers, and I was always an advocate for making all of this compliant and integrating it into our financial system, because the real reason for that was that it would expand the demand dramatically, and that's exactly what's been happening. So I have a pretty good read on the tonality of the Hill and Washington in general about Bitcoin, and they've come to the conclusion that the U.S. should lead the charge on this technology and not force advances in crypto offshore. They want to bring it back. I think for Bitcoin in general and for crypto and for stablecoins and all of these initiatives moving forward, 2025 is kind of like a fulcrum year, and the market senses it.
Thanks for meeting with us, Kevin.
You too. Thank you.